Hi, I would like to welcome all of you to Kreston Menon Deep Dive. Deep Dive is a segment where we spend a little bit more time on gathering deep insights on different verticals that would be relevant for each business. Joining me today are two fellow professionals, uh, two close friends who speak the same language of tax. So, along with me is Mr. Dinoop.
Hi.
Along with me is Mr. Vishal.
Hi.
Hopefully, looking forward for a wonderful conversation.
Definitely, it's going to be one interesting one that we must start with.
Meaning you're veterans, so to speak, compared to the time that I've spent in UAE. And you were here when VAT got introduced
Yes.
from a trading hub or from a pinnacle of ease of doing business. The first compliance that ever hit UAE, I was explained. It was explained to me that it was the introduction of VAT. Can you give us some insights on probably how VAT has evolved from back in 2018 when it got introduced to the recent amendments? A lot of recent amendments that we keep seeing has come up on VAT, and it has significantly changed.
Yeah.
Do you want to give your perspectives on that, Dinoop, maybe?
Yeah, like you said, VAT was the first time, this country moved into a regulated environment.
Yeah.
And of course, I still remember the time in 2018, maybe towards the end of January, when people still thought that
It would not come.
it will be extended. The deadlines for the first tax return filing, maybe, sorry, in February, not in
Yeah.
for the returns for the month of January, were supposed to be filed in February. And people were still expecting it to be further extended or maybe even cancelled. So from that time, we have a lot of regulations coming in. We have VAT, of course, and then all the other regulations like ESR or CBCR, and now, of course, in the CT regime,
Yeah.
and now DMPT coming up.
Yeah.
So it's been quite a long journey, and at a very fast pace. We have economies that have had tax for maybe decades.
Decades, yeah.
And now we have in UAE, which is in this almost at par with most of the developed
true, that's
economies
true.
in terms of tax. And it is becoming quite attractive for investors across the world.
Yeah, sure. I think what we've managed to do also as a country is we've still been able to maintain that good balance between ease of doing business and then at the same time making it equally attractive, right?
Correct, yeah.
And I think a lot of recent amendments that happened that kind of rationalized the penalty regime, maybe the rates that were quite high, so to speak, got rationalized recently.
Absolutely.
Vishal, if I may ask you, do you have anything to tell us about the recent amendments that the VAT regime underwent?
Yeah, definitely, Ravi. So, over the period of time, what has happened is the Federal Tax Authority has actually heard the businesses, understood the businesses, and
Yeah.
along with the businesses learning that, okay, how they are coping, what documentations are going on,
Sure.
they have timely introduced the amendments over the period of time to ensure overall compliance, to ensure overall transparency in the business. The recent amendments, as you can see, they introduced recently few of the topics where RCM on scrap metal trading.
Yeah,
that was one of a very major important ones which came in. Second was they brought in a limitation rule on how you can claim VAT refund. Because right now you can only claim, now the limitation very clearly states that you're only allowed to claim refund for a period of 5 years
Okay.
from the date you file it. This is one very major one, and now people are now planning it very correctly. So now there was no, earlier there was an indefinite period, so people like, okay, we will play a wait and watch.
Yeah.
Safety is like, no more wait and watch game, guys, please start. This helps them to collect.
And even there, they still, like you mentioned, business friendly. They still give an 1 year extension for the companies
Yes.
that haven't
Yeah.
applied for their refunds from 2018 till date.
Yeah,
They
yeah.
have given a 1 year grace period.
So there's a
even
good
there-
transitional phase that
the transitional
yeah.
phase, and they have really, given enough time for companies that are not prepared yet to
Yeah.
submit their refund applications.
Absolutely. Second one which comes in is that now the FTA has a power whereby, let's say, if someone is claiming an input VAT, but the case on the other side is an evasion of tax, now the FTA has a right to deny your input claim.
Okay.
Now, this is a very major one because as a buyer, or let's say as a customer, I do not know whether I'm allowed or not allowed. That happens at a later stage. So now I have to be careful as a customer to ensure that my seller is actually not only charging me, but actually complying his duty to pay the due tax to the authority. So I don't lose the money.
No, that's interesting because that is creating a lot of onus on every business
Yes.
to enhance their due diligence when dealing with anybody.
Yeah, the KYC becomes quite
KYC becomes
even more
quite-
important.
Yeah. So that's interesting.
Third part is, like you mentioned, the relaxation of penalty, which
Yeah.
is now affected in a very major way.
Hmm.
So few years before pre-COVID, they introduced an amnesty scheme
Hmm.
whereby FTA said that you declare all your taxes, pay only 25%.
Hmm.
I will waive off the 75%. That was one of a major, amazing move by the Federal Tax Authority.
Hmm.
Many government and many businesses filed their returns, completed their due compliance.
Hmm.
Now, by introducing a similar norm with a deduction, they are giving you a chance that, guys, please revise, please amend, and pay a very minute amount.
Hmm.
For example, initially where you were not paying, or let's say there was a delay in payment,
Yeah.
the interest was around 2% per month for the first 30 days,
Yeah.
with an additional 2%, which became 4%.
4%. Hmm.
And from a second month onwards, which is the end of 60 days, it was 1%, leading up to 300%.
Oh,
Now that is reduced to 14% per annum.
okay. Hmm.
So that helps.
Yeah.
Now over here, businesses need to understand that how they can plan,
Hmm.
do the right thing,
Hmm.
and ensure that they pay and comply fully. Because now this is the government telling you directly, guys, okay, here it is what you wanted. I heard you. I've reduced it. All you have to do is comply.
Yeah. And that's a very proactive and a very business friendly move to rationalize those. And it also gives a very welcoming flavor. Meaning, if you made a mistake, to make a mistake is
Earlier it was quite, quite.
it's quite penalizing on the
Yeah, the companies found it quite tough to take the penalties because you have found out the error. You would actually like to declare that,
Yeah.
but the penalties were so high that
Yeah.
it was quite scary for them to report to their board or maybe to their shareholders that this such a non-compliance and penalty happened.
Yeah.
So now that the penalties have been reduced, it makes much
It makes
easier.
sense,
It makes sense. It might make much easier. Maybe it makes even the collections better even for the authorities.
Yeah, that's true. So while we're on this topic, Dinoop, I read about the voluntary disclosure clarifications that came recently, which is again a move towards making sure the businesses are able to correct any mistakes.
Yeah.
Can you throw some light on that? What changed recently?
Okay, yeah. One big change was that earlier there was a confusion as to whether if you have no change in your VAT, I mean
Yeah.
the VAT due, the VAT amount, whether how to file a voluntary disclosure, and there were a lot of procedural difficulties also, and there was a lack of clarity on that.
Sure.
Now the authorities have clarified that even if if you have cases where your emirate-wise reporting has been wrong, or if your zero-rated supplies have changed, or your exempt supplies have changed, you need to make a voluntary disclosure.
Even though there is no...
Correct. Even if there is no difference in the VAT.
Yeah.
But importantly, the way we look at it, for RCM, for reverse charge mechanism, they have not specified this.
Okay, it's not an identified case.
It's not an identified case. So it, as of now, with no further guidance, it appears that for reverse charge cases, it's not really specified with authority. So that is one clarification.
It becomes very important also is that because these rules do help, but on one side, what we are also waiting for one more clarification to happen is that as per rules, there are 5 years statute of limitation.
Ah.
So the moment that 5-year lapses, the system disallows the button of voluntary disclosure. So if you look at it right now, 2018, 2019 or 2020, and even 2021, over the period of quarters as we are talking, the voluntary disclosure button is not there. So this rule does allow me. It's a very good parity where it's okay, says, okay, go ahead, do it. Technically, I'm restricted
Okay.
right now. But over the period of time, the FTA is assured that definitely they will be making over there. Otherwise, what happens is that if you get audited, if you still want to do an amendment, we are not able to.
Okay.
So that is one part which they are trying to resolve.
Understood.
And that should be done over the period of time. But yeah, like Dinoop mentioned very well, that people thought that if there is no impact, I don't have to do, I'll do it in the next. That's not the case. FTA is saying.
They've clearly called it out.
And yeah, now error is an error. I am giving you an option. Kindly do it and take the benefit.
Okay. Okay. Understood. And I think, Vishal, you touched upon a very important point. The time lag, so to speak, or the technical difficulties that the law allows something, but maybe the portal is not yet ready.
Yes.
So I just wanted to share my thoughts on something very interesting that happened. So under the corporate tax, when the ministerial decision 173 got announced, it allowed from 2025 for investment properties at fair value to have a 4% depreciation charge.
Yes.
Now that is effective now, like
Yes.
2025, which we can file by September 2026. the return is still not updated for that.
Yes,
Meaning
correct.
it's still undergoing those changes, so it is not capturing in those aspects. But what I want to stress on is it's a very cohesive, or it is a very inclusive environment that we are working in, where we almost feel that the regulators are also in it with us, that they are learning as we speak, that they are also able to take feedback and then try to figure out solutions for this as we speak. So it does not look like it is a very, what do you say, it's a very intimidating
Yeah.
situation. It is not an unfriendly
Yeah, it is-
environment.
it's
Where, and especially when we go to the FTA with a problem, most times we are able to figure
Yeah,
out the
they
solution.
do try to figure out things from the back end also.
Yeah.
In some cases, I mean,
That's true.
you have, of course, have the front end agents, but then it's some in
Yes.
cases where the front end agents are not able to resolve it. They have the video call mechanism.
Yes,
So
the video call mechanism works quite
it,
well.
it works very efficiently, and then they do try to help the clients to the back end. But of course, there are a lot of things to iron out. But as you said, it's evolving quite fast, and
Yeah.
it's only doing better day by day.
That's true. Meaning, I don't know if I've mentioned this to you before. So for me, the selling point of moving to UAE was the implementation of a corporate tax in a country. If you are able to be there at the ground level when that happens,
Yes.
that never happens anywhere else.
Correct.
There are very few countries
Yes.
where corporate tax
Definitely.
is not there. So, and I think what I was expecting was very different. Meaning, we are always used to having a very structured mechanism which is already too mature that there is no way that we can navigate it. But here things are much easier, and it is very business friendly.
Yeah, it is quite flexible in the way they approach it. So
Yeah.
let's say if they have introduced a law or a clarification also,
Yeah.
and let's say over the period of time, as we say, the business is learning, the FT is learning,
Hmm.
they will ensure that, okay, if there are any shortcomings in that, the upcoming clarification meets.
Well, address it.
For
yeah.
example, like we had in the first year of corporate tax for qualifying commodities, as we all
Oh
know,
yeah.
they introduced it first where it was varying opinions across, and everyone took their own stand. Businesses on case to case. The case was clear, but however, once they realized what was missing in that, immediately they rectified it and ensured that it is a retrospective amendment. Yes, on ground, like we mentioned, that is yet to be like directly beneficial on the system,
Yeah.
but they have done their work. It's
Yeah.
not that they have waited for a couple of years and they say, okay, we will see when it. No. As much proactive we as consultants are over here for all our clients, same way FT is also approaching to ensure, okay, you want to disclose? Okay, we'll be fully transparent. Okay, this is what we are amending. So it's going in a very good part after the first year, but still more is yet to come in.
Yeah.
So that's where, when we talk about first year of filing, now we are talking about the second year of filing as we approach. And it's going to be very interesting because in first year, everyone took a lot of assumptions. They had their own perspective and own reasons for that. I'm not denying, because I'm not saying that nobody went with the law. Everyone went with the law. We also ensured that to the law, you are mitigating it through documentation.
Yeah.
But that's what I wanted to hint on is like now going ahead, as you talk about the second year filing, a couple of things that you should know about.
Yeah.
What-
I think,
what do- what
I
is
think
it?
more than a couple.
Yeah.
Quite a few.
Yeah, quite a lot.
Yeah. No, because it's very interesting that you bring up this topic, because we recently had a very peculiar case where a small company, so to speak, owning a building somewhere here in Dubai, they did not have any operation. They just had the building. It was rented out. They were getting rent. Now, in the second year of operations, meaning in 2025, they were obviously looking at an investor, or they were going to get some facilities from the bank. So the bank suggested, your building right now is at cost in your books, so why don't you have it at fair market value?
Okay.
And they said, okay. So they went to their auditors. They said, is it possible? Yes, it is possible.
Perfect.
You know what happened in their tax return? They had not elected for one transitional provisions.
Okay.
They had not elected for realization basis. So what happens is when you increase the switch to fair market value, the gain that comes, the unrealized gain that comes, you are forced to pay tax
Tax
on
on
the
that, yeah.
unrealized amount.
Absolutely.
So
Yeah.
think of a situation where I do not have the money,
Correct.
but I have to pay the tax. And all this because of a yes or no question.
Yes.
Meaning nobody ever thought of it
Yeah.
because in the first tax period, you're setting the tone.
Correct.
And there, in no uncertain terms, there are irrevocable elections
and options.
that now, even with a VD, you're not able to change.
Change it.
Correct.
Yes, absolutely.
So we have had some cases where very expensive mistakes have happened in the first tax return, and this is what typically happens when you see the tax return as a compliance exercise.
Correct. Yeah, of course. The lack of assessment
Yes.
shows up very clearly here, and
Yeah.
we see numerous instances like this. I mean,
Yeah.
we have lots of family business groups
Sure.
for which we are doing
Sure.
both audit and various advisory engagement. So in many cases we have seen, let's say we have the compliance engagements of those clients, and then and let's say we have 5 companies within of the same group with very large operations. We are ready with the returns and all of that, and then towards the fag end of the return filing period, suddenly pops up maybe 3 companies which
are not
these
doing
groups
anything.
say are not doing anything, but in fact they do have a lot of employees within working under the visas of those companies, which means that they actually have intercompany transactions
Yes.
which was never getting reported.
Yeah.
Both for VAT and
Yeah.
then for corporate tax also, they are not maintaining the books. They are not
Sure.
they are not aware of their compliance requirements.
Sure.
So all of this, of course, yes, had they done an assessment, maybe definitely would have helped.
Yeah.
But now, yes, they are in a situation where they have to somehow catch up and
Yeah.
make the compliance proper.
No, that's true.
Yeah.
Any experiences that you had, Vishal?
Yeah, plenty. One basic one which is
Tell only
very,
one. No?
only one. I'll share only one which is very basic and very important for everyone to understand. When we chose the election, which is irrevocable, especially one mistake that they did was subject to standard rate of tax.
The free zones.
The free zones.
Yeah.
So like they understand, oh, standard rate of tax, they've not done an assessment. They did themselves when they in the first return they write, are you subject to standard rate of tax? Yes.
Yes.
Are you a free zone? Yes.
Hmm.
Then the return itself changes, which they do not know until unless you come to the second year.
Yeah.
Because it's the first year of filing. You
Yeah.
feel, okay, I'm done. No, I'm a free zone. I chose, okay, I'm not subject to tax. I will not pay any tax. They file their return. Now coming to the second year, when they realize, because that part is completely grayed out. It is not there. So automatically moves to the next page.
Yeah.
And now you cannot choose whether you are a qualifying free zone. Now the current system does not even allow you to change that, say no, and then say, okay, are you a qualifying free zone?
Yeah.
Say yes or no.
Yeah.
So that becomes very important. So like Dinoop mentioned, awareness becomes very critical for you to know where to say yes, where to say no.
Yeah.
I think this becomes even more important in cases where it was a company that had a very small activity in that first year.
Yes.
If it was less than 3 million,
Yes.
they will go to someone who advises them that if it's less than 3 million, you can claim a relief.
small business
And they
relief,
might
yeah.
not have discussed it in detail. And
Yeah.
then all of a sudden, like you said, they were elected for tax.
Yeah.
And the next year, when their actual operations scale up and they have a quite significant profit to report, then all of a sudden they cannot avail the
Yeah.
qualifying free zone benefit. So
No,
they lose
it's-
out on that relief that the authority
Correct.
had offered to them.
No, and it is, imagine the plight of the, let's say, the finance manager who did the return.
Correct.
And then what face will he have with the management to say that, okay, now you have to pay 9% on your entire profits, which
Yes.
otherwise would have been subject
Absolutely,
to 0%.
absolutely. Because this happened a lot, and especially in SBR also. If you see SBR cases, what people understood is that they understood the word revenue. And they just took the top line of the financials and there's okay. And there were some opinions that said, okay, you are below 3 million. So they understood below 3 million revenue.
As per revenue, as per IFRS, yeah.
That's it. So they forgot that, okay, what I have to see about other income, what needs to. Now that impacts not now.
Yeah.
Because the FT is not coming right now to
now.
check. Because at the time of filing SBR, the financials are optional. They are not mandatory. So they're like, okay, it's a mistake. But that becomes kind of a cumbersome for you to go back and tell,
That's true.
guys, you are losing a couple of benefits.
That's
Your
true.
return is filed as incorrect. You
That's
need
true.
to rectify it. Though the penalty is very small, but again, it's a wrong return. What you have done.
This is also true for free zone companies, I feel. I mean,
Yeah.
for qualifying free zone companies,
Yeah.
which have the revenue which is almost fully qualifying,
Yeah.
but they might have some ancillary income, not necessarily other income, but
Yes.
some ancillary income,
Correct.
Yes.
which probably is not
might
qualifying.
trigger your
And they
de
were
minimis.
not
Yes.
vigilant about tracking it.
Yeah.
so that it crosses the de minimis threshold, and then all of a sudden they are in a position where they are supposed to pay tax. So I mean,
Yeah.
so the qualifying free zone person assessment is not a one-time engagement. It should
a
be
continuing
It is a
continuing.
continuous one. Yeah. True.
It's a continuing activity that
Yeah.
every company needs to be vigilant about.
No, and I think it's important that now any business decisions needs to have a tax angle to it.
Yeah.
And meaning in mature jurisdictions, we have seen tax as a process, as SOPs. There is a mature tax team or a tax consultant. I think that is something that we will move towards gradually, and it is very important to do that.
Like we were discussing earlier, we were discussing earlier, companies often make, because they were used to doing this earlier, in the UAE, we did not have tax.
Correct.
So people were not really worried about making shareholding changes. They did it for various purposes.
Yeah.
You had, of course, the situation where the Emirati national shareholding had to be 51%, and then later on it got relaxed.
Yeah.
So, but then at different times, the shareholding structures can change for different reasons. Now, all of a sudden, we have a situation where, the company, the senior management goes into those decisions without the finance team or someone who is aware about taxes is not getting informed.
Yeah.
So some activity may happen, and the PRO goes and changes the shareholding, but it has an impact on tax, which is quite significant at the time the tax returns on you.
No, definitely. That's why I always say one thing at all of my times, like compliance comes at a cost now.
No, that's
So
true.
it's like no more like once you have incorporated an entity, then you go to a tax guy and say, okay, guys, please help me out. At the right start, if you want to implement something, let's say you want to incorporate or you want to restructure, the tax consultants and the team will definitely come on board because they may alter your decision-making process in such a smooth and a very good way that you were not even seeing that part that gets highlighted very easily now.
Yeah. Anything that you do, which is not fully normal to your business, anything that is slightly out of the normal route that you go, then definitely you will need to consult your, tax
advisors. Yeah. And I think we are also seeing a positive change where tax has definitely become more of a boardroom discussion topic. And not just as a tick in the box. No, it's meaning the return part is the simplest that you can do, of course. But any yes or no question that you answer wrongly has
an implication.
It's a long-term.
Definitely, long-term implication.
And like what we discussed, sometimes it is not reversible.
Yes.
Also, So that's meaning that's about the corporate tax return, which is only in the second year now, and we are already seeing a lot of changes that are happening. Meaning something that was very interesting that I saw was the R&D incentive. That came.
Related to Pillar 2.
Meaning it is very topical, and it is very interesting because there are two incentives that were announced originally. One was on high value employment creation, which has not come out yet. But the R&D is a very, very interesting one, and it is very, it's quite incentivizing, so to speak, for businesses who are engaged in R&D. And it's a very, a nicely drafted incentive that you can set off that credit with your corporate tax liability as well as your DMTT liability. And once you've identified what your qualifying expenditure is and you meet the number of employees criteria, I think the incentive is about 15% to 50%. You need to get an approval from a specified council. I think it is with effect from 2026. Now, what I feel is there is, so we are used to a lot of incentives. We are used to a lot of schemes that are designed to attract, investment in certain certain sectors.
Definitely.
I think we are slightly moving towards that, and I think this is one of many
they're
to come.
trying to bring in more substance into the country, of course, contributing to the economy as well. And speaking of DMTT, I mean, DMTT is coming up, and of course, we do expect a lot more guidance on that. We still do not know how the registrations are going to happen, how the filing is going to happen. So, of course, a lot of guidance is expected, but even there, even let's say we have a free zone company, which is subject to DMTT. Even let's say if they were a qualifying free zone person, they still need to assess their qualifying free zone eligibility before, even if they are subject to DMTT, because it could still be beneficial for them because you have the substance-based income exclusion, and it may still give them a tax advantage while filing their return. So the assessment, just because DMTT is in here, they shouldn't be assuming that now that 15% is there, we don't really need to look at being eligible for qualifying free zone person benefits.
No, but those are conversations that are actually happening.
Yeah, of course. Yes. Yeah,
Because
we have had cases similar to that. So yeah. So,
No, you rightly said, because usually what happens when we talk about a subject like tax or DMTT or even VAT or corporate tax, what happens is like an outsider will always say that, yeah, UAE is no more a tax-free haven. I used to enjoy 0% tax. There is nothing. Now I have to pay tax on everything. But that's a macro. The moment you do a deep dive, like Ravi you mentioned very clearly, like they have incentivized it in such a way. The moment you understand the law and you use the law correctly, and you plan your documentation from word go, trust me, you are on the right side of the law. You will not pay.
Yeah.
You just have to plan it. The government is saying, okay, I'm giving you all the rights, all the clarifications. You just follow it. Be tax transparent, be tax vigilant, complete your due diligence and comply. That's it.
Yeah.
Still, they are not paying any tax. Compared to worldwide rules, if you see, where you pay massive amount of tax,
Yeah.
even for one mistake and the liabilities shoot up like anything.
Yeah.
Over here, you are getting so much of relief in that.
Yeah.
And with Pillar 2 coming in, like you mentioned, it is not affecting everyone.
True.
Now, they have maintained the threshold at such a high level.
Yeah.
You are not affected directly.
Yeah.
So there is a handful of entities who will fall.
Correct.
Even they have been incentivized. If you are in R&D, they have been given
Yes.
a massive one.
Yeah.
And like Dinoop mentioned, we are still at a stage where we want more clarifications coming in, more details coming. That should be up by the quarter end of this year.
True.
We should be there. But it's a good start for us. And Pillar 2 also will be very engaging, because it will lead us to a lot of restructuring to be done.
yeah, and Pillar 2, what I think every MNE has to look at, or their local management has to look at, is to see that they look at DMTT as a jurisdictional level, you know, looking at all the group entities, because many a time we see that there is a certain vertical of an MNE which do not whose management do not know much about what happens in another group entity which is doing another vertical. Now that DMTT is at the jurisdictional level, you know, they have to, they have to look at DMTT from that group assessment point of view, and then approach your tax advisors, and of course take more advice on that.
No, that's true. Meaning what is also happening in DMTT is, because one entity in UAE may not even know there is another entity.
Correct.
In
Often
UAE.
that does happen.
Absolutely.
Yes,
Often
yes.
that is happening.
So the whole organization,
Even if they know, they might not know the level of activity
That's true,
that
that's
they're
true.
doing.
Yeah. I think a common theme that I see is the even if it is a substance-based income exclusions, even your R&D, there needs to be a nexus with UAE. I think there is a lot of stress that is being given on substance. So I think the messaging is quite clear. The messaging is that if you are seriously contributing to the economy of the country, you will definitely get those
advantages.
benefits. And I think that's where we are moving towards, and that is the right approach also. As we speak, I think I also noticed that this is not something that we can deep dive in a podcast. I think it's something that we should do over a webinar. We can reach out to a larger audience. There's a lot to speak in terms of recent amendments that have happened. We can give more use cases. We can give more examples.
Yes.
And I think maybe is that where we should leave?
Yeah, we should, because there are a lot of topics that we can go on if you want. That's no problem. But it requires
people
a
will
wider
lose their
reach.
patience if
People
you
will lose.
keep continuing.
That's
So
true.
let's not do that. We'll do it. We'll catch up again on one more deep dive session.
That's
for
true.
sure.
But thank you, Dinoop. Thank you, Vishal.
Thank you, Vishal. Thank you.
Thank you so much.
Thank you.
Thank you for joining us today. Stay tuned for more interesting topics soon to come your way.